Alright guys, check out XLG, Invesco S&P 500 Top 50 ETF. I want to review this. At the end of this video, I'm going to show you a fund that I think might outperform this in the long term. But let's get into it. What is XLG? XLG is an investment that seeks to track the performance of the S&P 500 Top 50 Index. What it does is it invests in 90% of its assets into the S&P 500, but only consisting of the top 50 largest companies within the S&P 500. And how does it do it? It weights them by float adjusted market capitalization. And let's break down really quickly what the top 50 holdings are. So you can see 60% of this portfolio is Microsoft, Nvidia, Apple, Amazon, Meta, Google, Berkshire Hathaway, Lilly, and then Broadcom. But look at Microsoft leading the way at 12%, Nvidia 11%, Apple at 11%, and then Amazon at 6%. And then Google is pretty much about 6-7% right here. As you can see, this is a very tech-oriented index fund. So if you just look at the fees real quick, gross expense ratio 0.2%. And just reviewing the overall composition just so you can get a better. This is passively managed. That's how they keep the 0.2% expense ratio. All U.S. stocks and large blend. So they have to be large companies, the largest ones within the S&P 500. So as you can see here, just to confirm it, North America, 99%, Giant, 80%, large, basically totaling to 100%. Your sector exposure, information technology is 44%, communication services 14%, healthcare 10%. So definitely compare it to the index funds that you own, but this could be good if you're looking to get very concentrated in the S&P 500 of just the big dogs. Semiconductors, 16% allocation, software 14%, media and services 11%, technology and hardware, storage and peripherals 11%, and the list goes on. But just to show you here, the distribution expenses, you can see that the gross expense ratio is high, 0.2%. I'm going to show you a fund at the end of this that I think can beat it, and I'll post that video at the end. Distribution yields, you get a little bit of a divvy, which is 0.79%. So that helps make up for the gross expense ratio. At least you'll get quarterly dividends on them, which you can see here. Q3 of 22 going all the way to Q2 of 2024, where they're paying about, it looks like 9 cents per share you own, when they're about $45 per share right now, which as you can see at the NAV price right here. Got to look at the ratings and analysis on this. It has long-term sentiment strong, but I think because the market in 2024 has ridden up so high that the mid and short term, they think it's weak. But it gets a 5 stars out of 10. Overall, good analysis and ratings by them. Next, let's look at the performance. If you put $10,000 in them at 2013, you can see that your $10,000 investment would be worth $40,000 now, so that'd be an excellent return. And what's more important is look at like the 1 year return. We're up 31%, 3 years 13%, 5 years 18%, 10 years 14% a year. But if you just held this for the lifetime of the fund, you would have made 10% overall. Now there are good years and there are bad years, so this is definitely a good year, as you can see, where it's up 32%. So the market, definitely in bull markets, this is what you'd want to have your money in, which would perform much better. Just to show you, this is an ETF, open-ended investment company in Invesco Capital Management, LLC. And when you compare it to portfolio fundamentals, its expense ratio does beat the U.S. equity mean at 0.39%, but I believe there are other growth funds that can outperform this one. I want to show you the chart real quick. Going into the chart, we've had some nice pullback here, but you have to look at the max chart. It started off around $10 a share in 2006, and then over the last almost 18 years, it's went all the way from $10 up to $48. But it does have pullbacks. When it does, look at COVID. It went all the way from, this is COVID right here, it went from $24 down to about $16, so it's almost a 50% cut. And then 2021, 2022 went from 37 down to 26, but overall bullish on the trajectory. So you can definitely see it definitely has momentum. The next thing you want to do is you want to look at the comparisons. What are they comparing XLG to? This is always a good way to compare your ETFs. You can compare it to OEF, IWY, IWL, and BKLC. As you can see, basically all of these are passively managed, but the expense ratios are all the same at 0.2%. So you're not getting much difference. What I liked about XLG is that you see that they have a defined net asset of 5.12 billion because of the amount of funds that they have in them, whereas these others don't. They have undefined amount in them. I'd rather know exactly how much other people are investing within this, and you can see the clear expense ratio shown right here. So let me just show you, at the end of this video, I'm going to show you the fund that I think can compete against this. I'm just going to type it in now as well. We're going to type in FSPGX. I invest in this in my taxable portfolio. And now, this is a growth fund that does hold more stocks, but it is growth oriented. And you will see, just looking at the composition, it does hold over 445 companies, but that same allocation that you're getting within the other one, it's a little different, but 56% of the portfolio is within these top 10 holdings, where Microsoft made up 13% in XLG. This is 11.52%, Nvidia was 11%, it's 10, and Apple is 10% versus 11. So it's very similar, same exact companies, except Tesla's in there. And you can see that you're getting this for a lower expense ratio. So if you look right here, fees and distributions, 0.0035%. Now this video isn't about FSPGX, but I'm going to post the video at the end just so you can compare it if you want to. But take a look into XLG, tell me if that's something that you're interested in. I definitely think it has potential if you just want extreme concentration, only 50 companies within it. This can definitely offer you something like that. But for me, I think it's better off having a little bit more broader diversification and less fees, because this is your XLG right here where you're getting, only 54 companies within this ETF. I'd rather just buy these companies individually, scratch the expense ratio of 0.2%, and you might as well just invest in what you want. I just don't understand why you'd want to pay 0.2% expense ratio and only get 50 companies in an ETF when you could just buy these top 10 guys, dollar cost average in them as well. I have a video on that, to how to buy automatic individual stocks. I'll post both those videos at the end here just so you guys can see for ease. If you're looking for that video, go under my playlist on the top, Trading Simplified. This is the channel. Go under Fidelity Index Funds and ETFs, click under the videos, and then you will see that I have multiple index funds and ETFs, but this is the one right here, Fidelity Growth Cap. Let's see if it pops up. Right here you have the Fidelity FSPGX Index Fund. Click on that one if you want to compare the fund. It'll definitely have it there for you. And then I also, on the bottom, you are going to see how I go through buying individual stocks on the right here on the Fidelity Fidfolio. Instead of paying the fee, you can just buy individually stocks, which I show how to do on this video as well, if you just want to avoid paying like a monthly fee that they charge if you want to use a Fidfolio. So there's definitely a lot on here that you can check out. Check out the index ETFs, index funds. There's definitely good stuff on here. So tell me what you think. Subscribe to the channel, share it, and leave a comment in the section below.